How do you turn this
That's not very impressive.
into this?
Pretty damn good, lad!
Same strategy, same indicators, same market.
What's the difference?
One word: optimization.
Say what?
In the next few minutes, I'll show you the exact steps I took to turn a simple MACD and RSI strategy from a loser into a consistent winner,
Everything you need to know.
and how optimization can completely transform the performance of any trading strategy.
Oh my god, text everyone about it.
This isn't a secret system or a get-rich-quick setup. It's a process that every trader should be using to squeeze out more accuracy, more consistency, and more profit from the trading strategies that they already have.
I like the sound of that.
Let's start with the base version of my strategy so you can see exactly what we're working with. So here it is. We're trading Solana USDT, we're trading 10% of the value of the account with each trade, and we're using 20 times leverage. The logic is simple. We've got three conditions in our buy setup. We're looking for the 4-hour MACD to be greater than its signal line. This tells us that we're broadly in an uptrend or bullish conditions. We're looking for the 5-minute RSI to dip below 40. So we've got a short-term oversold area or a nice dip. And lastly, we're looking for some volume in the market. I'm looking for the 3-candle moving average on the 5-minute volume chart to be above the 10-candle moving average. This tells me that we've got some momentum in the market. For the exits, we flip those signals. If the 4-hour MACD crosses bearish and drops below the signal line, then we no longer have an uptrending environment. Or if the RSI moves above 60, we've gone from being oversold in the short term to being overbought. When I run this backtest, the results look okay at first glance. There's a 66% win rate and plenty of activity. Average wins are around 15%, but the average losses are almost 25%. And when I open the trade list, I can see a real problem. There are some full liquidations, 100% losses. And that's because we're using 20 times leverage. It only takes a small movement against us to cause a complete loss. For a deeper explanation on leverage trading and why these liquidations occur, you can check out my video on trading with leverage. The overall return is a 13% loss over 6 months, so that's not a good strategy to trade live. So how can we improve this? The first place to look is risk management. Instead of waiting for a full liquidation, I can add a hard stop loss using a 5-minute last signal profit block. The question is, where should we place this stop loss? Should it be a 50% loss, 60%, 70%? Instead of manually changing the rule over and over and running each individual backtest, this is where Arrow Algo really stands out. I can use the optimization tool and test every variation automatically. Either I can start a new test or repeat the one I've just done. And if I click on the advanced options, I can click on Optimize Scenario Parameters, Configure Optimization. I right click on the fixed number block from the stop loss rule, because this is the block I want to be the variable in the test. Here I can set a minimum value, a maximum value, and the steps, which is the increments in between. So we're talking about a stop loss here, so let's look at the 5-minute last profit dropping below minus 50% to minus 70% and look at increments of 5%. Save the configuration, and this will generate 5 tests, one after the other, 10 seconds apart. And we can see the results here within the backtest summary screen. I can customize this view and add the metrics that I want to see, like the return, the win rate, probability, average win and loss, and the largest win and loss. This means we can easily compare the output of the optimization. So we've gone from a 13% loss to a range between 22% and 41% loss, but I'm not worried about that for now. What I'm looking for here is that the largest loss has dropped from 100% to the 70 to 80% range, and the average loss has dropped in all of these as well. That's a key insight with optimization. You're not always looking for higher returns first, you're looking for smoother and more consistent performance. Once you cut the volatility, then you can build profitability. Looking at the win rate for these strategies, the 70% loss kept the highest profitability of trades at 66%. So I'm going to stick with this one for now, as it gives the trades a bit more room to breathe and hopefully recover. Remember that we're using 20 times leverage, so it only takes a 3% drop to be down 60% in the position, and we all know that the crypto market is more than capable of a 10% swing within a day. So next, let's look at the other entry and exit conditions, specifically the RSI rule. We've currently got the 5-minute RSI rules set to below 40 and over 60. This is too noisy at the moment, and there are lots of trades with only small wins. So let's calibrate this. Again, going back to my backtest screen and choosing the optimization tool, let's take a look at varying the entries from 20 to 40 in increments of 5, and for the exits, let's look between 60 and 80, again in increments of 5. So that's 25 different combinations, 5 variations on the buy side and 5 variations on the sell side. If we start the optimization, then it will start generating the tests. Remember to keep this screen open while the tests are being generated. I'm running 6-month tests with 5-minute candles. That's 12 candles an hour, 24 hours a day. So over 6 months, that's 52,000 candles being analysed per tests. And we're running 25 tests at once. That's over 1 million candles. That's pretty impressive. So now that these tests have all been completed, we can see a range of results. What's really telling is that the upper RSI for the sell rule is really what drives the value. When it's down at 60 to 65, we see negative returns, but when it gets up to 70, 75, 80, we see the average win starts to double and triple in size thanks to our 20 times leverage. On the lower side, we can see that if we wait for it to drop too low, then the win rate starts to drop down. But the sweet spot here seems to be below 30 and above 75. Giving us a 197% return in 6 months and keeping our 66% win rate. The average wins are at 44%, but the average losses are around 41%. So we're winning more than we're losing. But can we make this even better? One thing I notice if I go through the trades is that we're getting clusters of losses, multiple losing trades that are happening close together. That usually means that the market's changed character temporarily, but the strategy keeps firing signals before it can adapt. So let's try adding a cooling off period. I'll set another condition for buying here, and I'm using the last order history block. The block has a time elapsed output, which is in hours, and I'm feeding in a 5-minute data watcher. So every 5 minutes, it's going to check whether there was a trade in the last 4 hours. And with this condition, I'm checking whether the last trade was better than a 10% loss. So by combining them both in this OR block, this is essentially saying, don't buy if there was a losing trade in the last 4 hours and wait for the market to reset. But are 4 hours and 10% the right parameters for this rule? Well, you guessed it, I'm going to use the optimization tool again to look at a range. This time I'm going to vary the fixed number block for the time rule between 4 hours and 24 hours in increments of 4. And then for the last profit, we're going to look between 5% loss and a 20% loss. So hopefully we can find the optimal combination for cutting out these clusters of losing trades. And here are the results. We can see here the range from 140% all the way up to 236% in 6 months. This is when the call-off period was for 24 hours and anything over a 5% loss. And just like that, a few smart constraints can make a huge difference. The strategy now trades less frequently than before. Now only 120 trades in 6 months when we started with over 500. But the equity curve is a lot smoother. The win rates improved slightly, but more importantly the volatility's dropped, meaning fewer clusters of losses and better overall consistency. That's what optimization really is. It's about discovering the rules that protect your edge when the conditions shift. That's the difference between something that looks good in a backtest and something you can actually rely on in the real world. Appreciate you watching, hopefully this gave you a clear idea of how to fine-tune your trading strategies. Help out the channel, drop a comment below, let me know your thoughts, give it a like and a share, subscribe and turn on the notifications for more trading insights. Stay safe, happy trading, and I'll see you in the next one.